Good morning, everyone, and welcome to the European crossover webinar. And let's take a look here. We have seen the euro drift back. We actually had our bias chart support for today at 11, actually from yesterday at 11:18. We retained that. So we've dipped below 11:18. And then I guess we got as low as what, 11:12, and then we rebounded 20 pips off of that. Let's go and take a look at the economic data that's going to be out for today. So we do have some market services data out of the UK at the bottom of the hour. Now we're all on the same time clock now, States and Europe. So it's going to be at the bottom of the hour. Services PMI, Reuters posted 49.7. Last one was 49.5. Then at the top of this next hour, we do have Eurozone producer prices. It's supposed to come in at Reuters poll is 0.1%. Last one was negative 0.5. Later on, we do have New Zealand dairy prices. There's never a specific time when these come out. I mean, we have it listed for 7 a.m. Eastern, but it's never specific. Then we do have Canadian trade balance at 8:30 Eastern. Let's see. Market service, final PMI here in the States at 9:45 Eastern, along with ISM. Now that'll move. ISM manufacturing PMI will be out at 10 a.m. Eastern. So let's look at the data for today. We're seeing the dollar CAD come in a bit weaker. I believe we kept the same bias chart support that we had from yesterday, which is going to be, I believe it's 31.22. We'll go with that. Cable relatively quiet after paring back yesterday. Dollar index just steady here. And the peso, after making a run yesterday, has turned around and slipped right back down again. And dollar yen continues to remain a bit on the bid. Now, obviously, I mean, I think I'm being dragged up by these spoos going to the going to the moon. And looking into the cross rates. This is very interesting. This guppy continues to go in and sit right here on a very major level, that 140. And Aussie yen also has strengthened post the RBA. We'll go on and take a look at that. Obviously, you can see the sterling weakening against the AUD and euro AUD. Whew, look at that. But that's been weak for a little bit, a little bit of time. I mean, had that chance to break out, and then we're trading that range, and we've finally broken even lower here. So it says the dollar rises on trade deal and Aussie steady after the RBA holds fire. The dollar advanced against the yen on Tuesday thanks to growing optimism. The U.S. and China are on the verge of reaching a preliminary agreement to scale back from the bruising trade war. I was hearing on the Squawk last night in Asia. Trump was at another one of these rallies, but anyway, he was saying we're so close. So I guess they're going to be making an announcement. I know that China was, I think they're all asking to take off some more tariffs. It might as well just squeeze them for all they can, because they know how desperate he is for some type of an agreement to kind of get the impeachment issue off of the front burner. So something that makes sense on their part to even ask for more. The yen and Swiss franc, two currencies that are often bought as safe havens during times of economic political strife, nursed losses as investors became more comfortable taking on risk. The Aussie dollar held steady after the RBA left monetary policy unchanged as expected, and said the main uncertainty continues to be the outlook for consumer spending. In recent days, Beijing and Washington have given encouraging signs of progress in trade talks. And the U.S. government is considering dropping some tariffs on Chinese goods, the Financial Times reported on Monday. Bloomberg also reported that China is reviewing locations in the U.S. where he could sign a so-called phase one trade deal with U.S. President Trump. Both countries have slapped tariffs on each other's goods in a trade war that has dragged on for 16 months and raised the specter of global recession. Any progress in resolving the row could potentially boost the dollar and riskier assets ease concern about the economic outlook and reduce the need for aggressive monetary easing. The mood is very much risk on, so that's how investors will approach the market, said Minoru Uchida, head of global at MUFG. We're getting some positive news about trade talks. This is all supportive of the dollar, and the trend could continue. The U.S. currency rose to 98.95 versus Swissy, and the dollar index against a basket of six major currencies rose to 97.59, reaching its highest in almost a week. In the offshore market, the won edged slightly higher. Earlier on Tuesday, the PBOC cut the interest rate on its medium-term lending facility for the first time since early 2016 to prop up a slowing economy. Currency traders are also waiting for the U.S. ISM manufacturing report due later on Tuesday, which forecasts to show activity accelerated slightly in October. Federal Reserve has cut interest rate 3 times this year. Aussie Dollar, little change at 68.84. Aussie Central Bank lifted its cash rate, record low of 0.75. And Tuesday reiterated its concerns about consumer spending. Sterling drifts higher ahead of the central bank. Weak PMI data on Monday also muted any expectations of policy changes for the BOE at a policy meeting this week. The PMI data showed that the construction shrank for the 6th month in a row in October, in line with expectations and reflecting a slowdown in growth due to political uncertainty before UK Prime Minister Boris Johnson now defunct Brexit deadline. BNP Paribas economists, for one, expect the central bank's November policy meeting to be a neutral event for the pound. We maintain a structurally bullish stance on the economy, on the currency, although with uncertainty surrounding the outcome of the general election, we are patient, they said in a note. Against the dollar, the pound drifted 2% higher at 129, but remained within recent ranges. Leveraged funds that bet on the direction of sterling reduced their short positions on the pound in the week leading at October 29th. With just over 5 weeks until Britain's head to the polls on December the 12th, the ruling Conservative Party is leading in the polls, and the risk of a no-deal Brexit is considered to have been reduced. With that, we're going to move into the analysis. Since the euro spent Monday's session on the defensive, but bias chart remains the same, 11.18. A two-hour close below 11.18 would allow for a challenge of last week's low. Upside resistance is 11.74, followed by 12.15. So there we go. So 11.18 is going to remain the same. Now, this morning we did dip as low as 11.12. You know, we had 11.13 before, so probably I guess would have been a bad idea to move it, even though it's not only a few pips, but kept it at 11.18. But our resistance goes and dips down to 11.74. Yeah, let's go move into the cable. Says the cable pared back from its recent challenge of the major pivot 2980. You can see that here. We've been talking about that, the significance of this 2980. So to start the week out, the cable pared back from its recent challenge of major pivot 2980. Short-term momentum has turned lower with support coming in at 2743, confluencing with 2763, which is the 23% back of 1961 to 3014. So it's going to be this 2743. It's a bit of a stretch, but the short-term momentum has turned lower. So, we've come up to 2980. We paired back. We actually did pretty good last week. I thought we would pair back a little bit more. We challenged the 2980 again, but we're starting to slide back, and so we may see this market dip back. 2763 seems a bit of a ways back, and to say 2763, but momentum has turned a bit lower here. Tell you what, we'll stay with the 2763. The 2743 is quite a bit of a stretch here. And we would be taking out these lows here, which the lows in support I'm showing here be 2810. So it'd already be be actually over 100 pips. So let's go with that 2763. Right there, 2926 will be the resistance. Well, we're seeing a bit of a nice little improvement here in the Aussie dollar post RBA. Now, they did hold rates steady, which was what they're expecting the Reuters poll. I posted a little bit of data, it was just the expectations in the Asian session. But it says the Aussie is holding its own into the rate decision. Reuters poll is for hold at 0.75%, 0.75%. Resistance is 69.44/76, where support is 68.52, followed by 68.31. Well, the 68.52 obviously held. I guess we'll just move this a little bit higher in line of that. It's going to be 68.66. Now, looking at the Kiwi, the Kiwi is paired back to start the week. Resistance remains the 64.36. You can see that clear as a bell. On a closing basis, with additional resistance to 65.26, well, we haven't been able to do the do here. So, but we're going to give them the opportunity to go just a bit higher. You see right there, 64.50. So we're going to go 64.50. You can see this coming right across there. And support, we're going to go and keep that at 63.58. We actually moved it down to 63.48. Let's go move into the dollar CAD. So the dollar CAD spent Monday's session marking time in a tight range. Support remains 31.22. Well, guess what? We're right there with resistance at 31.82. So we're gonna stick with the 31.22. We do have Canadian data out though later today. Something we want to keep. We've got trade balance and exports. So we may press that a little bit, but we're gonna stick with our guns here at 31.22. You know, despite dollar strength yesterday, the dollar CAD continued to just basically tread water. So, God, I almost suggest that we may see this dollar CAD even weaken further, but we'll stick with this 31.22, which we had. And there you go. With resistance remaining the same at 31.82. Let's go move into the peso. The dollar peso held Monday's bias chart support at 19.046. If you remember when we came on, our analysis over the weekend was for a low of 19.06. Well, that was our support, and we just tripped down to 19.046. I said, you know what, that's good enough. We'll stick with that right there, 19.046. And it ended up holding, and we saw the market move towards that 19.20. So the dollar peso held the Monday's bias chart support at 19.046, rallying on short covering to 19.20, but closed at 19.16, the day's bias chart resistance. Support is 19.08, with resistance at the former breakout pivot of 19.23.6. So basically kind of dead in the water here, but we're going to have 19.08 on the bias chart support. And we're actually giving it the benefit of the doubt. I'm not so sure about that now, but they've that, one of the analysis we did over the weekend was thrice had tried and turned away, and you can see that. So, but you can see there. So we're putting the resistance, we're giving it the benefit of the doubt on potential short covering, but so far no dice. Just weakening again. Let's move into the dollar yen. So the dollar yen rallied, pushing beyond Monday's bias chart resistance, which at the time we had 858, I believe it was. Pushing beyond Monday's bias chart resistance, 856. Resistance is 892, was supported 828. So we're actually coming up right into this 892. You can see that here. I'm going off right there. You see these touches right there? Right there. Actually, that would be 895. So let's go with that. 895 right there. Those touches coming across. I'll actually draw that out. And we said support is 828. Well, 828 is a ways off, so we're going to go with 839 here. But right now, it certainly looks like they've got things going their way. You can see coming in right in there, 839 right there. You see that? That'll be the support. Let's go move into the cash dollar index. So the dollar index started the week rallying back. Resistance is 97.66 high today so far. It's actually that's been the high, it looks like. Yep, 97.66. Well, it might have came in at 65. So, but it says resistance is 97.66 with support at 97 even. The index remains a sell. The dollar index would need to close above 97.89 for the week to negate the bearish outlook. And really, like I said, that wouldn't turn it into a buy. It would just actually just negate the bearish outlook. Although we have already come down here and tested. So, but once again, it still remains a sell unless we close the week above 97.89. So 97.66 is going to be the upside resistance. Looks like we just came up one tick shy of that. And for support, well, we won't quite look for the bond to come out yet. So let's go. Right there, come across. See that? $97.31. Let's go and move into the cross rates. We are beginning to push up higher here in this Kiwi yen. Obviously, the yen, come under some pressure with the whole thought about potentially them signing that phase one deal. We're going to go with this resistance here, which is 70.20. You can see that right here. That was actually an important intraday low at the time before the market turned around and came back down. So it's going to be 70.20 on the resistance. We're actually above this 50%. Really opens the door for the potentially this market to come up here and challenge up in here, which is 70.47. But I don't think the wheels are going to come off, or for the yen yet. So let's go with 70.20 because the rises have been incremental. So it's not like as if we're looking forward necessarily at this point to rally 54 pips. So 70.20 will be fine there. For support, that's pretty clear here, the 69.43. We're going to go with that. Major level. Let's take a look here at the euro yen. Well, with the yen weakening, it certainly has put a little bit of life back into the euro yen. But let's not go overboard. So we're just going to go right there. You see right there? The market probably would find some resistance here. 21.36. One pip higher. Support in the meantime would be right there. Actually, it's going to be right here. 2081. Figuring that with this whole, they're going to sign the phase one, it's going to keep the yen under pressure. So it's going to be 2081. In the sense that we're finding some momentum. They'll try and push this. I don't think we'll turn and fall apart, but I'm saying is I think we'll find some sellers who come in here to lay off some risk. Let's go and move into the euro odd. Now we do have UK data at the bottom of the hour. There we are. Services here coming in at 49.7. Let's go and move into, go back to the cross rate and put in, so we can see the other pairs. There we go. Obviously the guppy and the sterling odd, and here we go for the data. 49.7 is the pull. 50, a little bit stronger. There's the guppy right here. Says new orders remaining steady, but not that much of a change here. Look, very quiet. So let's just go and move on. Let's get on with the euro odd. Well, we've seen this breakdown, and the euro has been a bit weaker, and then on top of that, we got the Aussie strengthening. So let's take a look where we're at. Certainly looks like we're going to break low, and the 78% comes in line down here. So it certainly looks like in time we're going to eventually move lower. It's a pretty good little drop. But for right now, let's go with 60.53 for the bias chart support today. Resistance, well, boy, that has certainly changed. It's going to be right there, the break. See right there? Right here. So resistance is going to be 61.38. And this is turn bearish now. We'll move on to the Euro Kiwi and see if that's still bearish. Hold on. Or if it turns bearish. Let's go move into the Euro Kiwi. Now that actually looks like we're still stuck in the mud. Hang on. Let's take a look at here on the daily. This definitely does. Yeah, we're going to go with the bearish. It certainly looks. It hasn't quite broken down completely yet, but it certainly looks like it's heading that way. And bias chart support, we're going to go right. I actually already tagged that line already. 72.73. Be a pretty good break there. We'll go right there with 72.50 right there. You see that coming across? 72.50. It's quite a bit of a break from here, but if they hit those stops, I think that's what we'll go to. 72.50. And it is bearish. Now. And resistance is going to be right there. Essentially where the apex is, 74.04. Aussie dollar, Aussie yen, that is starting to really move higher. Let's go and take a look here on the daily. We're just about there right now, actually. It's actually going to be 75.62 right there. 75.62 for the bias chart resistance. We're actually going to go and move the support now here to 74.73. To drag it down here seems a bit too far. 74.73 for the bias chart support. And with that, let's go and move into the guppy. We're just holding above this 140. This market certainly is trading tight. And of course, like I said, the yen's coming under some pressure. So we'll stick with this 39.70 on the downside, and the upside, $40.73. And on the daily, 40.77 will there. And let's close out with the sturdy nod. Obviously, the strength in the Aussies having its impact even here. Right there. Potentially 85.47. Resistance is pretty clear. That's coming right across there, these touches. $87.19. Boy, that's a pretty good move away. Let's actually just lower that just a bit here since we are under pressure. Still a ways away. 87.12. Here's where they broke. Actually going to work a little bit lower on the break right there. There we go. 87.02. Overall, still remains bullish, but it's certainly starting to turn lower. Let's go and take a look at some of the other markets. We did see that pair back that I discussed about in crude oil. Probably a little bit of a return rally back here. We can take a look at it here on the 30-minute. Some resistance here at 56.93. Right there. So we'll look at 56.93. And if we're looking at there's that gravestone dojo we talked about yesterday. On a retrace, we're just about to 50%. We just got above it, but we got 56.93 here. Some nice resistance. You can even see that here clearly. Oh, thanks a lot, Rick. Appreciate it. Thanks for letting me know. Okay, so yeah, I was clearing my throat, so I didn't want to have to. So I punched the audio. But thanks a lot. Thanks for pointing that out. So here on the, let me just to reiterate. So the 50% camp is coming in right here, just below, but we've got resistance here. You can see the significance here on the 30-minute. See that right there. So we come back up here. Should be some resistance in here. Moving on to the gold. As I mentioned, we actually had three opportunities here. This was the one from the prior last week when I said, hey, you know what, we got some resistance here. I think it was this one here, or it might have been the week before. And I said, hey, look, 1509. And I think it was the week before. But watch, we can make it up to 1516. And boy, the wheels really came off the caboose at that time. And then we had this other chance here. Now, yesterday we went back at it again and quickly failed. And but I think right now we're just marking time in gold. I think he's just trying to figure out what it wants to do. I don't see, other than the opportunity yesterday, I don't see anything happening in gold right now. We look at it on a daily. I don't see anything meaningful at this point. We did bump our heads against it. It looks like we do have a hanging man here on a daily. So obviously this was another opportunity yesterday when they rallied back up there, particularly on sell. I didn't even notice the daily from Friday. But pushing back, I think it's just a bit of a mixed bag still now for gold here. This look at the balloons breaking down here. This should be supportive for the euro. It hasn't been yet, but that should be supportive overall for euro. Look at this. The balloons continue to break lower. We're into some support, but you would think that'd be a little bit more supportive for the euro. But that's all we have for today. Thanks for joining us here on the European Crossover webinar. We'll see you in the chat room and later on the day with the FX Daily Wrap-Up.